Greetings, traders, and welcome back to our Forex mentorship program for beginners. Today, we are going to be looking at the Japanese candlestick anatomy introduction. Okay, this is the introductory part, and this is going to be part one because there's still going to be another video I will do, and I will talk about the Japanese candlestick anatomy into details. What is a candle? They represent transactions that have occurred in the market over a set period of time. It could be 1 minute, 1 second, 15 seconds, 15 minutes, 20, 30, 40 minutes, 1 hour, 4 hours, daily, monthly, weekly, yearly, and the rest. So when you step in the market and you see a candle, it represents a lot and a lot of information. Geopolitical information, of them are represented in the form of candles. So when we start looking at candles, you are going to understand a lot about that. Now, how are candles designed? A candle has a body, a candle has a high, it has a low, it has an open, and it has a close. And the size of a candle is going to determine the strength and the weakness of the buyers in the market. Let us look at this candle on a buy day, which means if the bulls are in control of the market, the bulls are those who push the market up. If you step in the market and the market is a buy, we anticipate or we expect that the closing price of the candle should be above the open price. Let me explain. This is a candle. Let's consider this white candle. This candle price opens below here, and then price trades below, form the low of the day, and then push up, form the high of the day called the upper shadow, and then retrace and close above the open price. So a body or a candle has a body that has a low called the lower shadow. It has an open where the price opens. It has a high called the upper shadow, and it has a close. If it is a buy day, the closing price should be above the opening price. I hope it is understood. Let us look at a scenario where it is a sell day. It is also going to have a body. It's going to have a high called the upper shadow. It's going to have the low called the lower shadow. It's going to have the open price, and it's also going to have the closing price. But if it is on a sell day, we want to see price close below the opening price. On a buy day, price should close above the opening price, but on a sell day, price should close below the opening price. So on a sell day, we have the open above here, we have the up, price trades up, forms the upper shadow, trades right down, forms a lower shadow, and then retraces and closes below the opening price. I hope it is understood. Now, the size of a candle is going to determine the strength and the weakness of the buyers and the sellers in the market. If you step in the market and you see a candle that has a very small body, it means there was indecision in the market. If it is a buy candle and it is very small, it means the buyers ran out of strength. On the other hand, if the size of the bullish candle is very big, it shows that the buyers were so in control of the market. The other scenario, if we have a sell market and the size of the candle, the sell candle is very small, it means the sellers ran out of strength. But if the size of the candle is very big, it means that the sellers were so in control of the market. Let us look at an example. We say that on a buy day, if the body of the candle is too small, it means the buyers ran out of strength. Look at this candle here. You see, the size of this candle is not as big as the size of this candle, which means the buyers ran out of strength over here. Look at this other candle. It doesn't even have a body. It means the buyers ran out of strength. Okay. Now, on a sell scenario or on a buy scenario, if the candle body is very big, it indicates that the buyers were in control of the market. Look at something. Look at the size of this candle. It means the buyers pushed price up, and it's going to be displayed in the size of the candle's body. Look at this. On a sell day, if the size of the candle is very small, it means the sellers ran out of strength. If it is big, it means the sellers were so in control of the market. So it is going to be a sell day. Look at the sizes of these candles here. I hope it is understood. Look at the size of this candle. Very big. But look at the size of this one. Very small. The sellers ran out of strength. I hope it is understood. Let's look at mysterious shadows. Shadows in the market represent strength of either the buyers or the sellers. If a sell candle has a very long upper shadow, it means the sellers were so in control of the market. It means buyers stepped in, pushed price right up, then sellers said, no, you are not going to defeat us. They stepped in and they pushed price right down, closing price almost closer to the opening price. So you see, the length of this wick indicates that the seller stepped in so much and they pushed price down. On the other hand, when you see a candle that has a very long tail, it means that the sellers were in control of the market. They pushed price down, but the buyers stepped in and pushed price up, closing price right far away, almost closer to the opening price. I hope you understand. Let us look at it in the chart. Look at this wick here. This is an indication that the buyer stepped in and they pushed price. So the candle body is going to have a very long tail. Look at this. They stepped in and pushed price, and eventually what happened? The buyers took control of the market. Okay, look at this one. What happens here? The buyers were in control, but the sellers stepped in and they pushed price, forming a very long wick, and eventually what happened? The market went down. So it is an indication that the sellers are stepping in the market. You are going to see very long wicks like this, meaning that the buyers tried to push price up, but the seller stepped in, pushed price right down and closing it right below. I hope it is understood. So when we start trading, you are going to see things like this. Do not worry. And we can use this information to take trades in the market, okay? If we see a lot of rejections with candles that have very long wicks, okay, at a certain level, it could be an indication that the pressure is being mounted. If you see it at a resistance level, it means the sellers are stepping in because buyers are struggling to push price, but the sellers are stepping in and they are mounting pressure on price. So you are going to see very long wicks, okay, indicating a selling or seller's pressure. Let's look at what happens eventually. You see, eventually sellers step in because we saw long wicks from above, indicating that the selling pressure was high on this currency. You see, eventually, look at the size of the wicks here, very long wicks above, showing that the sellers want to take price down. So this is basically introduction to the candlestick anatomy. I am going to share this note in the mentorship program so that you can have time to go over it. One thing to take home is a candle body has a high, it has a low, it has an open, and it has a close. If price is buying, we want to see price close above the opening price. If price is selling, the candle's body should have a price that is close below the opening price. Okay, the length of a candle body determines the strength or the weakness of buyers and sellers in the market. If candles form very long wicks or very long tails, it indicates the strength and the weakness of the sellers and the buyers in the market. We are going to look at that when we start trading, do not worry. And this was a basic introduction to candlestick anatomy. In our next mentorship program, I am going to talk about the candles and their various names in the foreign exchange market. Thank you so much for listening, and until I talk to you again next time, be safe.